Hello, class. Welcome to the chapter 3 and 4 handout answer video. All right, hopefully you had a chance to work through it and try these problems yourself and you're able to get in. You're just here to check your answers, but if not, that's okay. Go ahead and get this handout ready and you can just work through it with me as we go here. All right, so I put it up here up on the screen at the beginning of the year. We have a company that estimates some following costs. Important to note that what we have here is an estimate. Okay, and this is for the month of December. It gives us an actual cost. Okay, so I'm just going to note here. These are estimates. That is the actual cost. Okay, calculate the predetermined overhead rate. Okay, so the predetermined overhead rate, if you remember, it is our estimated dollars divided by our estimated base. Everything our estimates were given up here, so our estimated dollars were $416,000. And this says we are going to apply on the basis of direct labor costs. So our direct labor cost estimate was $520,000. Comes out to 8 or 80%. So 80% of our direct labor cost is going to get applied as overhead. So that's how we can read that there. Okay, so then it says calculate the applied production overhead applied in December. So our applied is our rate. 80% multiplied by our actual base. Our actual cost here was $43,700. Excuse me. And when we multiply that out here, we get 34,960. Okay. Those were the two answers we were looking for. What's our predetermined overhead rate? 80% of direct labor cost. How much was applied? 34,960, 80% of the actual labor costs. Okay, we cannot tell if it's over applied or under applied here because we were not given what the actual overhead costs were, just the actual labor cost. All right, so here's same company. Now, gotta be careful when we read here because now this stuff is our actual information. It is not what is estimated. It uses normal costing and applies overhead at the rate of 80% of direct labor cost. At the end of the year, cost of goods sold was $1,890. Again, that is an actual number. So it says calculate the overhead variance. Well, the first thing we need to do is figure out how much overhead was actually applied here. To do that, we first have to figure out our predetermined overhead rate, which was given at 80%. 80% of direct labor, okay? So if we want to find out how much was applied, we take that 80% and we can multiply it by our actual direct labor cost of $532,000. So we get that 425,600 was applied. Okay. Our actual overhead costs were 423,600. Okay, so we have a difference here of $2,000. Okay, is it over applied or under applied? Here it is over applied. That is our variance here because we applied $2,000 more than our actual cost. Now it says dispose of the overhead variance by adjusting cost of goods sold. So you have to kind of think about this critically. If it was over applied, it means we need to lower our cost to bring it down to the actual cost. It means our cost of goods sold goes down. So if we were going to journal this, I'm gonna make the second entry first. I'm gonna credit my cost of goods sold by 2,000. And remember, it's going to debit out of that manufacturing overhead control account, because that is where that journal entry would be. That's where that extra would be sitting, would be in that control, to make the difference between what was actual and what was applied. Okay, that disposes of it, and it makes our new cost of goods sold what? 1,888,000 instead of 1,890,000. All right, here is a big question. All right, again, here we want to note these are our estimates. Okay, so anytime we're going to figure out any rates, we're going to use our estimates. And down here, we have some actual numbers. Okay, what other information do we need to know? So for the cutting, machine hours, and for the sewing, direct labor hours. Okay, so we're going to have multiple rates here for each of our departments. It says calculate the predetermined overhead rates for each department. So for the cutting, we're going by machine hours. Remember, anytime we are getting these rates, we are using estimates. Our estimated cost in the cutting department is $240,000. The estimated machine hours are $150,000. We divide that out, we see we are going to charge that out at $1.60 per machine hour. Okay, that is how we are going to apply overhead in the cutting department. In the sewing department, our estimated overhead is $350,000. Our activity base here is direct labor hours, and they estimate a total of 100,000 labor hours. So our rate is going to be $350 per labor hour. All right, remember, all of that comes from the estimate. So now I can raise this up because that's all we need the estimates for. Next, applied. So in the cutting department, we're applying it at $1.60 per machine hour. How many machine hours were actually used? We come up to our actual data, we get 13,640. So we are applying here 21,824. In the sewing, we take our 350 multiplied by our actual direct labor hours of 8,600. And we find out that 30,100 was applied to the sewing. So now, and that's the overhead applied to each department for the month of June. Now it says, what is the variance? Well, our actual in the cutting department was 20,610. So if we did that out, we would find that it was 1,214 over applied, because we applied more than the actual cost. So it was over applied. The actual cost here was 35,750. However, it was under applied in the sewing department, right? Because we applied 30,000, but the actual cost was 35,750. So we had an under applied there. And if you put them both together, you will find out for the entire month here, our overhead was 4,436 under applied, meaning when we make our adjustment for the month, we are going to increase our cost of goods sold by almost $4,000, which is not a good thing because it is going to kill our gross margin. Okay, so hopefully that helps you understand chapters 3 and 4 a little bit better. Okay, you get through your homework on that. I'll have some more videos out for you on chapter 5 soon. As always, if you have any questions or need help with anything, do not hesitate to reach out to me. I am here for you and I'll do whatever I can. Have a great day.